want to thank everybody for dialing in today. Clearly, we've gone through significant change in relation to the response to COVID, and part of that process has been a number of us have been working from home, and that's a unique challenge for us around tax time. So we had a number of union members contacted the office asking if we were able to provide some advice or assistance in relation to how to approach this element of working from home. As a union, we're not particularly experienced or skilled in relation to these tax matters, but we have a good working relationship with MGI, who are some of the best people in the field in relation to broadly around a range of accountancy products and services. And we spoke to them about whether they would be in a position to provide not specific advice, but some general advice. So luckily, we've got Helen Whelan with us tonight. She'll be able to give a presentation on some of the broader matters, and I think she has a PowerPoint and a range of materials that will be available after the webinar. We've provided with some of the questions beforehand that were provided to us, so some of them we covered, some of them won't be, but we will also have an email out to participants and people who registered but couldn't make it this afternoon to provide some of that background material. But at this point in time, I know it's a busy time of day for people, so I might hand over to Helen, and I think you should have the capacity to take over the screen.
Thanks, Alex. Yes, and good afternoon, everybody. I'll just share my screen. So as Alex explained, the recent months have seen a change in working environments for lots of people. So I'm just going to run through this afternoon just some general working from home and how to make those claims. Obviously, tonight is just a general nature and everybody has very different circumstances. So we would always recommend that you have a chat to your tax advisor or give me a call. My details will be at the end, and we can have a chat about some of the things that we discussed tonight. So basically what we're going to cover through this afternoon is just what is a home office, and the reasoning around making these claims, what you can and can't claim, the methods for calculating your claim, and just run through, there's an ATO example that we'll just run through at the end. So a home office is traditionally a dedicated space in your home, which is set up to be able to carry out your duties as an employee. So lots of people have flexible working relationships, working matters, and so they can work from home on one day a week and things like that. So traditionally it would be a room where it's set up in your house. So we need to just make sure that we distinguish between a home office and running a business from your home. So running a business from your home is a whole set of other deductions, and usually has some capital gains tax consequences if you sell your home after you've run a business from there. But making a home office claim won't lead to your home becoming subject to capital gains tax. And then also because of COVID-19, obviously the government has extended what you're able to claim. So previously sitting on your couch, for an hour at night in your PJs and working on your laptop while you're watching telly wouldn't normally allow you to make a claim, but the government has recognised that we all don't have 5-bedroom homes with a spare space for an office. So sitting up on your kitchen table during this limited time would be allowable. So what expenses are we looking at? So the types of expenses that we're looking at are, it's a way of compensating you, because when you're working at home, obviously things like your electricity and cleaning and your phone and internet at your home, those sort of costs increase. So the other thing is that you might have to set up your home with equipment such as, desks and chairs and maybe a laptop or a full computer office and printer. So what you can't claim is really just private costs, things that we would consider that we would have anyway. So even though your employer might be able to give you coffee, tea, milk and things like that, if you've already got them in your kitchen cupboard at home, you can't claim for those. And also, if you have to buy a laptop, an extra laptop for your children to do homeschooling, which we all enjoyed, and then also like if your employer provides you with a full setup, so they send you home with your computer set up from work or things like that, you obviously can't claim for those. If you spend, it's only for time that you actually spend working, so lunch breaks and homeschooling. I know myself, my 8-year-old took up many hours during the day running backwards and forwards. I didn't know I was so bad at grade 3 maths until the last couple of months, but anyway. And you also can't claim things like occupancy costs, so rent, mortgage, interest on your mortgage, water and rates. They're considered sort of holding costs of your home, and they're more associated with running a full business from your home. So there's a couple of calculation methods that are available to work out how much I can claim for working at home. There's 3 at the moment, normally only 2. So the shortcut method is is around for a limited time, and it's the one the government has brought in basically to cover the COVID-19 restrictions where lots and lots of people were working from home. There's a fixed rate method and an actual cost method. So we'll just run through each of the methods now. So the shortcut method, as I said, this was just introduced for a limited period of time, and it's because so many people were working from home for during the COVID-19 restrictions. So it's available for 1 March to 30 June in your 2020 tax return, and then when you're doing next year's tax return, it's available for 1 July to 30 September. Obviously, depending on how things go in Victoria and other states in the next couple of months, they may look to extend that if we're looking at if unfortunately the whole country has to go back into lockdown, which everybody's fingers crossed it won't happen. So if you use this method, it's just a flat 80 cents per hour for each hour you work from home. And all you need to do to use this method is work out how many hours you're working from home. Now, if you're unfortunately on stand down or not really able to do your job at home, but had to be at home, but you every now and then checked emails or, you know, took a few phone calls and things, that wouldn't be classified as working from home. And as I said before, you have to have incurred additional costs. The working from home deduction is around compensating you because you've had to incur additional costs. So, this method is a broad method, and it's in place for a limited time, and it covers everything. So it covers your phone, your internet costs, your decline in value for furniture and equipment, electricity and gas, and everything. And so if you use this method, you can't claim other expenses for working from home. Under this method also, you don't need a dedicated working area, so you don't need a home office or a space. You can sit at your kitchen table, you can sit at a table in your lounge room and things like that. But as I said before, you do need to keep a record of the hours that you worked from home. So as accountants, we keep timesheets. Luckily, we have to account for 6-minute units. It's an exciting life that we lead. But I know many people have rosters, or they can keep diaries. Another method might be, like, we all send emails these days. So we know we started sending emails at 8:30 in the morning. We were still sending them at 6. We had a break for half an hour for lunch. So, you know, we could easily work out, and it's not a lengthy period of time, so it should be relatively easy to work out how many actual hours you worked from home. So you can only use this method, as I said, for the time periods listed. So if you actually were lucky enough to have flexible working arrangements prior to the 1st of March, then you have to use one of the other 2 methods for the first part of the year. This is only available from 1st of March. So the second method is the fixed rate method. So this allows you, it's a set claim of 52 cents for each hour you work from home. And when you're incurring additional running expenses, it does cover decline in value of home office furniture and furnishing, so desks and chairs and things like that. It covers electricity and gas for lighting, cooling, heating, and if you have to fix furniture and things like that. So in this instance, you need to keep the actual hours you work from home for the year, but you can keep a diary representation for 4 weeks if that shows your usual pattern of work. So if you usually work 12 hours a week from home, and it's consistent for that 4 weeks, you can use that for the remainder of the year. And you do need to keep a new 4-week diary if your pattern changes, like if you end up working from home 3 days instead of 2 and things like that. You have to have a dedicated work area to use this method. So you have to have an office which is set up away from, not in the lounge room, or it can be a desk in the wall, like an office space, but it has to be a dedicated work area. So this method doesn't cover these costs, so phone, internet, computer consumables, and decline in value for equipment, so phones, computers, laptops, if you purchase a new phone, a computer or a laptop. And so these can be made in addition to this claim. Obviously, you need to substantiate any of the additional costs, so you need your receipts for the amount that you spent on it. If there's certain equipment worth less than $300, you can claim it, but if it's more than $300, you have to claim the decline in value. That just basically means you claim the deduction over the life of the asset. It's called depreciation. So if it costs $1,000 and I'm allowed to depreciate it over 2 years, I can claim, proportionate 500 over the life of the asset. You need to keep phone accounts showing work-related versus private calls to determine your work percentage. And you can keep a diary of small expenses up to a maximum of 200, where they're less than $10 each, and then you can't get a receipt for them. You can show work-related internet use, so it might be that you're on the internet for 5 hours out of a 24-hour period, and how much of that internet usage during that time. And then also the percentage of time that you use your equipment for work. So, you might have a computer that you use 10% of the time, and the rest of the family also has access to it for study and things like that. So there's some useful links which will get emailed out to everyone just on this. So there's some hints from the ATO about claiming mobile phone, internet and home phone expenses, and how to calculate the decline in value of the depreciating assets, such as phone, computer, laptop. So the final method is by far the hardest method, I would say, for most people, because it involves tracking actual costs. So you need to have receipts. The Australian tax system operates on you lodge your tax return and they accept it unless they review it. So having all the receipts is essential in the background for any reviews, and for making sure that you can justify how you made the claims. So the actual cost is actually claiming actual costs for electricity, actual costs for furniture and equipment, phone expenses, internet, cleaning if you've got a dedicated work area, and computer consumables. What they say with this though is that if you're just sitting in your lounge room working on your laptop while other family members, say, are watching television, the additional running expenses for your home are likely to be not minimal, rather than you wouldn't have a substantial claim in that situation. So as I said, there's a lot of records to be kept using the actual cost method, and so it's unlikely that a lot of people will have kept all of this, or may not wish to go to the trouble of backdating to do this. However, we've seen a lot of work from home arrangements are going to be continuing. So people have got used to being from home and are now having more flexible arrangements. So in the future, they may want to keep more detailed records to enable them in future years to use either the fixed rate or the actual cost method once the 80 cents shortcut method is no longer available. So receipts, representation of 4-week representative period to work out how much is your work-related usage of all your things. For your heating and electricity, you need power from your power bill, the units of power and things like that. So the total annual hours that you've used for work-related expenses. So you've also got to take into account sort of other members of the household. So if you're in a share house with 2 people, you can't get your electricity bill and claim a portion of all of it. So you could only claim a portion of 50% of it. So you can't just take the whole electricity bill as an example, or the whole phone bill if you share the home phone costs. Not that many people have home phones anymore. Everybody just runs off their mobile. I'm pretty sure there's probably very few landlines left in Australia. So as I said before, we have a self-assessment method of completing your tax return. So you're making a claim for a deduction in your tax return, and you may be required to substantiate your claim. And what the tax office does is they do a comparison usually of people who are in a similar work. So if you say your occupation is this and your work-related claims are 5 times higher than everybody else in Australia who's claiming that way, you're likely going to be flagged for a review. So there is an app that the ATO, yes, they're getting up with the times, has made available, and you can download it, and it's there to assist you in tracking and keeping records. And it's not just for home office expenses, it's for all work-related expenses. Obviously, it's a bit late now for the 2020 year, but going forward, if you're not only continuing flexible arrangements, but also want to be a little bit more accurate in your record keeping, so that you ensure that you maximise your deductions that you're allowed, and keeping all of the receipts for those. So I'm just going to run through, this is from the ATO website, so it just gives you an example of, what we can do. It's a bit wordy, but I'll just skip over it. Bits and pieces of it. So what you can do to make an assessment of which is the best method for you. So this particular person already had a work from home arrangement prior to the 1st of March, and he'd also worked out some costs of what his internet plan was. He was sent to increased his work from home days from the 17th of March due to COVID. No, we all didn't get sent home on the 1st of March. So some of us had our work from home arrangements start later in March, mid-March, and some of us earlier. So you do need to work out when those work from home arrangements actually started. And then because he's working from home more, on the 19th of March, he did buy himself a new proper chair so that he didn't have a bad back when he did actually return to the office. So he's wanting to claim his home office expenses, and he used to just complete using the fixed rate method. He's kept all the required records and receipts, and he's also worked out that his private use of his home office is 10%. So he realises that obviously there's a new shortcut method that's available to him, and so he wants to do some of the comparisons, which is what everybody is wanting to do at the moment. So the first step is to work out the actual number of hours that he worked from home. So you can see here just the basics. So he does 12 hours a week. He had 3 weeks off at Christmas, so that equates to 384 hours for 1 July to 29 Feb. From 1st of March to 16th March, so he was still doing only that 12 hours a week at home. And then from the 17th of March to 30th of June, that's when he increased his work from home because of the COVID restrictions. But he was still doing his site visits. So he was at home for 555 hours and out on site for 75 hours. He works out that his internet usage used to be 10% for work from home, but now obviously when he's there more often, it's up to 30%. And that's taking into account his family's use of the internet, who were all probably home with him during that time as well, and his private use. So in the example, it did say that his employer provided him with a phone and a laptop, and they also paid his mobile phone bills. So he's unable to claim for any of those because they're the costs. Those costs are being met by his employer. So as I said, right back at the beginning. We can only claim our costs, not costs that the employer has reimbursed us for. So we've worked out the amount of time we've spent at home. So that we'll just work through the methods. So if he just does the fixed rate method, the 52 cents, this is the total hours he's worked from home, giving you the hourly $500 deduction for that side of it. Because that fixed rate method lets you also then claim additional costs, he works out the internet that he's able to claim for the additional periods. So from 1 July to 16th of March, you may recall it was 10% business use, and then from the business usage upped when he was home more often, 30%. So under that method, using the 52 cents, his total deduction would be $631.86 to be exact. So if we now use it, because he knows that the 80 cents method is higher, he's wondering whether it would be better for him to use that for the period 1 March to 30 June. So he splits the year into two, and he says, okay, from 1 July to 29 Feb, I was at home for 384 hours at 52 cents. I can claim my internet, and so his total claim for that period is 254. But from 1 March to 30 June, I can use the shortcut method, so I can claim the hours at 80 cents. So for that period, it's 463. And so his total deduction using the combination of the fixed rate and shortcut is 718. And we can't claim the cost of the chair or his internet for the period 1 March to 30 June because the 80 cents is all encompassing. So it covers all of those costs already. And then the actual cost method, this is where it gets into lengthy calculations, and we all need some Excel spreadsheets to be doing this. So he has his internet. We can claim the cost of the chair. We can claim his electricity. So we sit down and he says we use 25 cents per kilowatt hour for electricity. We've got two 12-watt LED lights. We're using the air conditioner for 50% of the time we're working from home, and it uses 2 kilowatts. So all of those sort of records, and we get our electricity bill, and we sit down and we work out the claim for electricity. Once we've gone through all of that, we can see that we've got $131.10 for internet that we can claim. We've got his office chair we can claim. We've got his electricity that we've sat and calculated all of the kilowatts and costs. And his total claim using the actual cost method is $613.77. So if we're comparing those three, obviously he's got his deduction if we use the 52 cent method is 625, 708 using a combination, and 613. So obviously we're going to use the $708 deduction. So a combination of the 52 cents and the shortcut method. So that's the process that you would normally go through. So this is just a bit of a summary of the rates and what's included and what's additional. So and which will be shared out. I do have some more links, but I think that we're going to share those at the end once we've been through some questions. So I shall stop sharing my screen and switch back over to you, Alex, if that's all right.
Yep, thanks for that. While the advice is general, we do have an opportunity for some questions. There will also be an email that comes out afterwards to participants. They can follow up with an email question. But is there any particular questions that people wanted to ask at this point? There's one question: is stationery separate to the shortcut method?
It would be. It's sort of not really a large expense. So whether it's worthwhile keeping a receipt, I guess if you're looking at printer ink and things like that, then it can be it can be a bit more expensive, but you would be able to claim them separately. But you would still have to I would still say you'd still have to a portion, obviously, because you're not only using your printer. So like if kids are doing assignments and things like that.
There's another question for the 80-cent method, I think it is it just the paid hours of extra hours recorded in the timesheet, but paid out in flex? I'm not sure.
So if your timesheet says you're paid for the 80 hours, but you've actually worked, say 90, and you get that as flexi time later on or something like that, I assume that it's actually hours worked. So if you're actually physically working and doing work and can show that, not necessarily in a timesheet, but it through emails and work that you, say a Word document you've saved at 6 o'clock when you've done your extra hour or something like that, then it's actually hours that you're working. So the question on unlimited data, so you still usually, even if you've got unlimited data, you can still usually get your usage on a day. So it might be that you have a look and say, this day I was at work, so my usage for the day was this much, but this day I was at home and my usage during this 8 to 5 was this much. So
we've also got a couple of questions in the Q&A section. One was both my wife and I work from home. Can we use either of these methods?
Yes. So because it's additional costs, you're being compensated for additional costs you've incurred. If you're both at home, you're obviously both incurring additional costs. So it's not necessarily double, but let's just assume double the costs. I was just going to say, and sometimes one or other of you may have already had a flexible working arrangement, so may have already been working from home, and then you've had someone else lumped into your office with you with another computer and things like that. If you're sharing the computer and only one of you is working mornings, one of you is working the afternoons, it's all apportioned, if that makes sense.
Another question in the Q&A was, how does gas expenses come into play in relation to claiming?
The tax office just used throwaway lines like cooling, heating and lighting and things like that when they're talking about electricity and gas. So some people may have gas heaters in their homes that uses gas and things like that.
There's a couple of questions which are probably on it, might be a bit specific in terms of, I don't think you're in a position to make a recommendation about one method or another, but the question around working required over time.
If you're actually working at home, it's hours. So if you have to work 5 hours on a Saturday, that's 5 hours of working from home. It's irrespective of when you do it. If you are more apt at working from midnight till 4 a.m, then you can claim those hours.
So yeah, I think we've hit the half-hour point. Thank you Helen for the great presentation this afternoon. I think it's certainly made it a bit clearer for me, and I think it's certainly made it clearer for a number of members online. Coming out of today, we've got a copy of your presentation. I think will be available for us, and we will forward that out, plus some of the other material that you've prepared.
Yeah. I will just share my screen one more time, Alex. So the ATO does have some calculators. So these will certainly may assist you in determining what's the best method for you. So there's a new one for the shortcut method, and then there's one which you can use to calculate fixed rate or actual costs. It's a question and answer set of things. So they're certainly very useful for a quick assessment, although it's no different to dropping it into a spreadsheet or a quick calculation. And then my details are also there and available at the end when this is shared out. So,
and we'll go through also, and if there are any questions that we didn't get to tonight, we'll pass them on to Helen and try and get you answers as well where appropriate, in terms of, as long as they're not too specific. Just want to thank Helen once again for her time tonight. I think it's been a really useful activity, and hopefully it'll be something that has made tax time a little less complicated for all of us. And thanks everybody else for dialing in. Thank you very much.